Hey everyone, in this video, I'm going to share with you one growth stock that's down 92% off its high that I think you might regret it if you don't buy it on this huge dip. So before I reveal what that growth stock is, I'm going to discuss its financial metrics to show you what has me attracted to this growth stock. And then towards the end of the video, I will reveal what that growth stock is. So let's get right into it, starting with this company's revenue, which it has done a nice job expanding over the last several years. You could see revenue was around 45 million in the quarter ending July of 2020. That has almost doubled to the most recent quarter where it made 88 million in revenue. And this company has several factors, tailwinds, you can say, that are working in its favor over the long term for it to continue expanding revenue growth. One of it being moving most of the transactions that happen for its services, for its industry, are happening offline. So in the longer term, the company will benefit as more of these transactions move from offline to online channels, where this company and this company's platform will benefit from that shift. The next thing I like about this company is the expanding cash flow from operations to sales. That's the chart I have pulled up here, and what you could see is 10.6% in the most recent trailing 12-month period, but that's up very nicely from close to 0% in July of 2020. So you could see a nice upward trend, meaning more of its sales are turning into cash flow. More of its sales are turning into cash flow from operations, which is really important to me when I'm looking at businesses to invest in. Are these sales turning into cash flow, or are these sales just sales for sales sake? Right? Some companies just like to grow so that they can demonstrate growth and are hoping to, at some point down the line in the future, to somehow make money through some benefit or something that hasn't yet happened, or they haven't yet demonstrated that they can actually do. This I much prefer, where the company demonstrates to me as an investor that as they grow revenue, they're expanding profit margins, they're expanding cash flow from operations. They're demonstrating it to me quarter by quarter. I'm seeing it, and I like to see that. That's something I'm attracted to. And finally, I will say that this company's business model, the business model, the foundation that it's built on, is very good for cash flows and very good for profit margins, because it's an asset-light business. It's a platform. It doesn't need to spend money on physical locations. It doesn't need to spend money on expensive warehouses. It doesn't need to spend money on these types of capital intensive projects, and therefore it leaves more money for cash flow from operations. It leaves more money for investing in the core of the business, which returns a greater return on investment. Finally, the last thing I will point to on why I like this growth stock is its valuation. What I have here is the chart of its forward price to earnings ratio, and it's trading at the cheapest valuation it's been. It's trading at a forward PE of 13.5. This stock used to trade at a forward PE above 60 around January of 2022. So you're getting this stock at near somewhere between 1/4 and 1/5 its valuation in terms of the forward PE ratio. In terms of the actual price, it's more than 90% off its highs. So you're getting this stock at a bargain value. All of those things has me attracted to this growth stock and has me recommending this growth stock to you, my viewers. Now, what is this growth stock? It is Fiverr. Fiverr International is the stock I'm talking about here, and it's down 90% off its highs. And you might say, well, Fiverr's business is being disrupted by artificial intelligence, and I will push back against that and say, is it really? I've got several videos discussing how artificial intelligence is not actually hurting Fiverr stock right now or in the medium or longer term. And you could see the management, CEO, CFO of Fiverr talk about and give evidence on why that's the case. So for all those reasons, I think you might regret not buying Fiverr International stock right now. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.